Inflation is at a 40-year high, and mortgages are at a 20-year high. With new construction down by 22% in September, the housing market is slowly declining. Experts say we should buckle up for more as the feds continue the price hikes. For this video, we will examine how brutally the housing market will drop. Let us begin. For the 8th straight month, home sales have dropped by 24%. This indicates the longest housing market bubble since 2007. However, new homes listed on the market fell by 22%. Nobel Prize-winning economist Paul Krugman has said that the higher rates will hit home prices worse than they are currently. Krugman said, "The Fed's rate hikes have indeed led to a sharp fall in applications for building permits. However, construction employment hasn't even yet begun to decline, presumably because many workers are still busy finishing houses started when rates were lower. Thus, once the unemployment hits the construction part of the industry, we would be facing a severe market drop." We all know what is causing this situation. The Federal Reserve is fighting 40-year high inflation and chances of a recession. Bloomberg U.S. economists led by Anna Wong predict a mild recession in 2023. Other Wall Street analysts have it higher in their projections. Thus, Fed Chair Jerome Powell has to drop unemployment below 5% and inflation to 5.5%. The job is making mortgages hit a 20-year high. Reports indicate that mortgage applications fell to their levels in 1997. For context, 1997 is as far back as the year Princess Diana died. The majority of us watching this video now have no memory of that. That is how far back this is. Until we have come out of recession, the mortgage applications will continue being below the average. We have more expert opinions on that coming up shortly. Speaking to CNBC on 2 occasions, Professor of Finance at Wharton School, Pennsylvania, Jeremy Siegel expressed a significant price decline is upon us. He noted, "I think we're going to have the second biggest housing price decline since post-World War II period over the next 12 months. That's a very, very significant factor for wealth and for equity in the housing market." Professor Siegel also expects housing prices to fall by 10 to 15% as they have already started accelerating on the downside. In addition, the chief economist at Moody's Analytics, Mark Zandi, predicts a 20% decline. In a recent housing report, he shared that the housing market is the most interest rate sensitive sector of the economy. It's on the front lines of the fallout from the Fed's efforts to bring down inflation. There's going to be a coast-to-coast downturn in the housing market. It's going to be brutal. No part of the market is immune, adding, "Assuming rates remain near their current 6.5% and the economy skirts recession, then national house prices will fall. Most of those declines will happen sooner rather than later, and house prices will fall 20% if there is a typical recession." Housing is a significant part of the adult phase of Americans. For most people, buying a home is the most adult decision ever, signifying independence and financial control. However, most young Americans at homeownership age have yet to experience this joy. The market has become unbearable for especially first-time homeowners who have been faced with the highest mortgage rates in decades. With each Federal Reserve interest rate hike, mortgages are the first affected. As it stands now, everyone has been made to lay off buying homes. The National Association of Realtors has announced that first-time buyers only made 26% of home buyers between July 2021 and July 2022. Why is not owning a home such a bad thing? Well, the Urban Institute's Janique Ratcliffe will tell us more soon. That is a sharp decline from the usual 40%. Other aspects of the report indicate that older people, wealthier, and of Caucasian descent replaced the 14% as the association knows in the last 41 years, since it started tracking home buyers. Meanwhile, the statistics indicate further that the median age for all buyers was 53 years old, only as old as its first survey in 1981. White buyers occupy 88% of the market, Asian Pacific Islanders occupy 2%, and black buyers represent 3%. Other races constitute 7%. The vice president of the Housing Finance Policy Center at the Urban Institute, Janique Ratcliffe, told New York Post, "The sooner you start that journey, the more you accumulate the wealth benefits of homeownership." These reports are necessary because once a section of the population continues to rent because they cannot afford to buy a home, the more likely they will have nothing to pass on to the next generation. This means that the next generation might suffer fewer properties handed down with new age homebuyers not spread out evenly across the population. This is why experts advise that you should snatch a house while you still can because it comes with long-term equity and benefits. Here is something with long-term benefits: subscribing to this channel. We will update you with everything you need to know about the housing market. Hit the button now. In conclusion, We have until mid-2023 to be in the clear with the housing market. Redfin economics research lead Chen Zhao said, with inflation still rampant, the Federal Reserve will likely continue hiking interest rates. That means we may not see high mortgage rates, the primary killer of housing demand, decline until early to mid-2023. Primarily, every home is a family's biggest asset. Real estate appreciates over the years and makes for excellent properties. But with portfolio diversity, we have our monies elsewhere in investments. For our previous video, we listed ways to protect your assets during the recession. Check it out!